Good afternoon. Welcome to Options Tender. It is Thursday, 11:30. It's the end of the month, so I wanted to spend a little bit of time on the monthly time frame, and then I'm kind of naming this episode, I guess, "Hard to Kill a Bull," and I've kind of lost this sense. And when I started talking about this week, we should get our reversal, I thought it would have been more on Tuesday, but it's taking a little bit longer. And it's hard to kill a bull. I'll go through that on the daily time frame just to explain exactly what we're talking about and show you in a couple different ways. But we have SPX, and we're going to go through on monthly down to the 65. I'm going through SPX because SPY has this funky monthly candle that goes all the way up to like 4,700 or something crazy. And it's glitching right now, so I don't know. I might have to fix the candle after today's close, see what happens. But if you are new here, go down to that bottom right-hand corner, hit that Options Tender logo, and subscribe. So we do these videos as often as we can. I've been on the road, and we're back into town. I'm at home, so I plan on getting back on track. I'll get video done today, tomorrow, Saturday. There's a lot to show. Information has been changing and giving us some more hints on our reversal, and I think we've started that reversal today. So here we go. SPX on the monthly time frame. I'm going all the way back to 1929, the crash, the peak of that 1929, the peak of 2000, and our peak here in 2021, I believe 22. We're all those connect. I think we have a really good high here. I think that high is in. I've been mentioning that over and over, and I would imagine we either have some sort of sideways trade or a move in price that could possibly bring us down to the old highs of 2000. So that's the master plan. I'm not going to go well into that, but we should see some sort of impulse wave down to possibly the bottom of this channel here. And that would give us a test to this top. It doesn't have to reach exactly there. And we'll see if we start to get momentum to the downside. Can that change? Sure. Things change all the time. We're traders. We'll keep an eye. But what information is telling me right now is that we're in for a correction. We have completed that impulse wave move to the upside, and we need some sort of correction. Too hard to predict from this far back. Do we get all the way down there? I don't know. But we're going to take it month to month, day by day, year to year. And I want to show all these points here, all these highs for the channels, and I think we made our high here. It's price action really wants to push to the upside. The market is naturally bullish. The market is bullish 90% of the time, as opposed to your corrections, your bearish corrections. Otherwise, you after these corrections, the market continues to the upside. So we're looking at this monthly candle right now. Since we are on the last day of the month, we're not seeing any sort of reversal signs, nothing significant on the monthly time frame. Now, that doesn't mean we can't reverse and even make new lows. It's just not giving us like this hammer type candle, for example, that made a good reversal. We had this top up here. Well, I would consider that a tweezer top. So perhaps we get some sort of the same thing here. We start reversing, get a little bit lower, make some sort of tweezer top here. But we're holding resistance. That's the most important thing right now. We're holding resistance on the upside, and on the downside, we have this consolidation area that we've been pointing out for many months. We back tested it and now we're lifting off of it. So are we in a bullish stance? Sure, absolutely. This low is holding, but we are also in a downtrend, a high, and I think this is a good high, lower high, lower high. Okay, so we'll see what happens after this month. I think price action is just kind of holding on today. We are a lot more negative on the Qs, the triple Qs on tech, but I do believe that price action is just holding us up just to, I guess, the whole window dressing. You know, it's not glamorous. We're not green, but window dressing for the month, not making any drastic moves, and then tomorrow we can resume. And it just so happens that tomorrow, let's see if we can bring, just so happens that tomorrow we have Powell. So we have Powell here at 11 a.m. and appears at 2 p.m. too. I didn't realize it was at 2 p.m. as well. But we have PMI at 9:45 and ISM as well. So we have a lot of catalysts that can happen tomorrow that can give us a lot more information. So when we go through Friday, it's very typical that Monday sort of follows suit on Friday. So whatever kind of price action we have, we're bullish tomorrow. It's going to be a big sign. It's going to be a big sign that we're probably, even possibly making new highs here, breaking out. I don't see that happening. That's not in my cards yet until it does. But Friday is strong, then Monday should have follow through, and we should continue to the upside. Now, I'm looking for a reversal. I think all of our indicators are showing that the reversal has already started, and continuation to the downside should be tomorrow. We should see some follow through. The market should let go, meaning SPX and the small caps and the Dow should allow the market to drop because it's holding it up just randomly today. And we should have some follow through to the downside Friday, and that should continue on to Monday. All right. So let's go. Stop waffling on here on the monthly. Now we're going to move a little bit quicker. I just want to get all that out in the higher time frames there. Let's look at the weekly time frame. Now, nothing has changed here. We've continued to look at this channel. We said at our minimum bearish scenario will be that this is an A, a B, and a C, with C ending down here around 3,300. That sounds drastic, but that's nothing. I do think price goes a lot further. Now, what we're looking at is a reversal off this channel top here. Couldn't hold above it. We're reversing off of it. That's a tell sign that we're getting our weekly reversal too. Now we have another day, so we can, that can change. But if we get this reversal, perhaps tomorrow we don't do really anything. Maybe this reversal candle just sets us up for next week, and we end off pausing tomorrow on all the information, and we don't really do a whole lot. But at least we'll have our reversal candle for a setup, and then we'll be looking for an evening star or some sort of reversal. I don't care about all the names of what they are, but you get it. We have a hammer candle here. We have a doji, possible tail candle. And then next week, we should be looking for follow through. Now, with the follow through here, we'll be looking into, we'll already have to start looking for the Fed again on December 13th. So super important. That's 2 weeks away, a little bit less than 2 weeks, I believe. And we should, I believe, have our pullback into December 13th. Then I think it's decision time, because at that point, I think we'll have a nice pullback, and I think we'll have to make a decision whether we're going to hold a higher low and break out, or we're going to follow through to the downside. Now, either way, it's not going to go straight. Okay, we're going to probably get some sort of reversal, a bounce. Whether that bounce continues is the real question, or we sell into the bounce. All right, taking a look at on the weekly time frame, we're starting to get our crossover on the slow stoke. So that's a real early signal there of a possible reversal. We need to confirm that underneath 80. We're getting some overbought conditions here on the RSI already after this huge move. And then we're looking at rolling over, possibly rolling over on the MACD. And we are in a green histogram, so that says we have a bull cross here. I could put this over here, but we'll see if it's a whipsaw or not. It looks like we're in a downtrend at this point, even though we're in bullish territory. So a lot of questions. This is not going to indicate anything for us right now. All it says is that we could possibly still be heading higher, or we could be rolling over lower. Indecisive, right? And that's exactly what we're looking for, is some sort of pullback for a higher low and go higher, our primary scenario where we head lower. That's all I want to show there. Let's go down to the daily time frame. On this daily time frame, you can kind of see how price action, you have this huge move here, and we're just really getting tight in a triangle. And after we break out from this triangle to the upside or to the downside, that should indicate our trend direction for the rest of the year, not only the year, but starting off into next year. So we have the channel top. We have these pivots down low. That's going to be, maybe we get a little bit tighter in here, and then we break down or break up. So this is just an optical, this is a visual of how price action is getting tighter here, and that it should be pretty decisive when we break down from these pivots or from this channel top. We close these gaps. We have this island gap. We close there. Boom, boom. I can take those off. We're testing that 8 EMA in the daily time frame. So technically the trend is still up. I believe on the Qs, I'll just visit there real quick. I believe we might be under it. All right, so we're underneath the 8 EMA on the Qs. If we close under there, that's bearish. We want to continue underneath there for our primary situation. Perhaps we tomorrow we bounce above it and don't hold, and we continue to the downside. But continuing with SPX, pull up some indicators. Indicators are rolling over. We're starting to get our bear cross here. We don't have the histogram yet, so it's technically still above it. We have our rollover. We had bearish divergence here on the daily time frame. We had our sell trigger already. We had that, I believe, yesterday or the day before, we actually had a sell trigger, and that's starting to play out. So I do expect price action to continue lower. Anything else on the daily time frame? We did have our DMARC sell exhaustion at the 9. We didn't quite hold that high. We actually made a new high for about 2 hours. So the 9:30 open and the gap up, closed the gap around 11:30. So we had the breakdown from there. So, you know, still a really good sell signal. And you saw in the weekly time frame, we couldn't hold this breakout from the channel. I just don't have enough energy after this huge move. We just need at least a pullback. Do we pull back to these pivots? You have a pivot here, you know, depending on how long it takes to get down there. We have this pivot with the gap and support. So that's a good bounce type area. Then we have these pivots below that are super important for this triangulation. And that coincides with gaps as well. Now, starts to break down lower. We have our ascending triangle, huge support area, once resistance that we kind of broke into and just you know, ripped out of it. So we have that's below there, and then further on we'll have to see what's happening with this reversal. Another important thing is looking at structure. So what we'll be looking for is this a 5-wave impulse. By the time we get our bounce, is this a 5-wave move? And then we get our pullback for wave 2 on a lower degree, and then we start heading lower. That's what we're looking for our primary. Or will this be an obvious 3-wave move? We get a 3-wave move, we should be looking for higher prices and a breakout at that. And this should be considered some sort of maybe impulse 1, 2, and higher. So I'm giving you both scenarios. Yes, my primary account is bearish, but we have to watch to see what kind of structure we have coming into these support areas. And either way, being a trader, when we start to get into support areas, we want to use protection. We want to use caution, take profits, and look for a bounce. Because either way, we're going to move down and look for some sort of bounce. Let's go to the 65. See if we can learn something on the lower time frame. All right, so in the turquoise, we have our channel top there. We had our 13 exhaustion count, made that new high, and now we're starting to head lower. We closed the gap here, made from, was that Monday or Tuesday? So close that gap. We're just, again, we're in a holding pattern. I don't think we're going to have much of a fall later in today. I think it's going to happen tomorrow. We have the catalyst tomorrow and or into next week if we don't have any movement tomorrow to give us that weekly reversal candle. But it does appear that we may have an impulse wave here down that we eked out. So 1, 2, 3, 4, and 5. So if we do start to bounce into tomorrow, maybe we sell off from there as a 1-2 setup. So since we made the new high, we need to at least have some sort of pullback for a 1-2 before continuing lower. Not much else to look at on this point of view. We can start to look at the pullback area. We have a possible channel that's just a pivot to me. And so I don't think that's going to be strong enough to hold, but we really have to watch that just in case this is a flag breakout and we hold this position and head higher from there. I'm looking for a much further pullback. I'd really prefer if we go to the Elliott wave. I haven't updated this, so I haven't used SPX in a while. We moved over to SPY because we wanted to relate price action with most people that trade SPY, so we use that more often now. But after this huge move here, we're at minimum, I'm looking for this 42.88 area. Really, I'd much more expect the 786 to get to those lower pivots there and to really bring in the bears, and we get our bounce off of there, and then we'll have to see what happens after that. But I do think we'll get much lower, get the bulls out, pull bears in, and really start volatility, kickstart volatility. So a lot of room to move. It's 45. We're at 45.42, and that's around 4,300. So we have about 250 points, 270 points, even to get down to this 62. And I think we're heading lower. We're 300 plus points to get down there, and I think it's going to be pretty quick. We have to expect it to be pretty quick because we're looking for an impulse wave to the downside for a very bearish move, or even if not, if we're looking for a wave 2, that should be fairly rapid as well. Wave 2s are typically zigzag, so you should see a 5-3-5 pullback. Even if you're a bull, this should be a nice fast pullback to the downside before heading higher. So I think that's pretty much all I want to show you. The indicators, they've just been holding up and going sideways, and we're starting to get oversold. I don't think this move is going to make much more action to the downside. We're already on the lower end of everything. We didn't quite get bearish here, but maybe we get that little bounce into tomorrow and head lower. And I think that should be about it. We can peek at the VIX here. See what the VIX is doing. We're in a channel, and we're starting to break out from that channel. So the VIX is looking good on this aspect. That should help bring the market down. Look at that wick. Had a nice little move there for 30 seconds. And so, you know what? I got off track a little bit. Let me show you on let's go to SPY. Let's see if that candle is on the daily time frame. It had a big wick on the monthly. Okay, it's not on the daily time frame. So now talking about it's hard to kill a bull. That's what I want to bring up in conversation. And if you notice back in some of these areas, we have huge consolidation in such important reversal areas. Even when it's spread out and you have a little bit more volatility, it's kind of the same concept. But you see like this box here, you can draw these boxes much smaller in these consolidation for tops when forming tops. So another way we can put into this is another way we could say this is that the tops are a process and bottoms are an event. So typically you see these nice big moves rapidly from the heading to the downside and reversing. Look at that. Huge V reversal. A little bit of process here, but hard to kill a bull just means that, you know, sometimes it's a process just to make a top. And you'll notice that when you're making a top, you'll have kind of a big tech or so leading you into it. And then eventually, as this process goes, you'll see the small caps catch up, then some beaten up stocks, and then the meme stocks are right towards the end, really starting to take off. That's not healthy for the market. It's really kind of signaling that they're everybody's catching up and they are getting in line to reverse. So in our case here, we had a large move to bring us up above support, and then we had an inside candle. But after this, we had really, if you count this day, 1, 2, 3, 4, 5, 6, 7, and this is our 8th day within this range. So we're forming a top here. It's a process. It's hard to kill a bull. That's the point I want to make on this. So one thing that we do strategy-wise, and I had to roll out one position today. I actually have to record that with the patrons. I had to roll out tomorrow's SPY put. I had lost half the value of it, mostly from decay, but the true strategy, the large position that I have, is the in-out spread. It's I put one out 42 days out, so that gives us about 30 trading days in order to make a reversal. It's a large position. It's very, very conservative. And if you're interested, you can check out, I'll put the video at the end, and I'll put a card up top that you can check out. But this allows us many, many days to find this reversal. And then as we eke higher, we sort of add to our positions, and we can add some lotto weekly or within 2 weeks puts. And I did a weekly put at the top of this move here, or I'm sorry, at the channel top here, I added a SPY put in our trade alert, and we're just now getting underneath it, but it lost most of its value from this decay, and the VIX also falling. So a lot goes against you if you don't use spreads. An in-out spread just happens to be a real conservative spread where you have one in the money and one out of the money buy. And I'm not going to go through all that here. Sell one out of the money, buy one in the money. That's our in-out spread. And that will save us from all decay and such. So it gives us 30 trading days to get some sort of reversal. Even if we would have put it on this top here, we're in really, really good condition for that reversal. We did not. We actually started putting our positions here. We had some positions down here, but those got wrecked on CPI. And we were wrong. We were wrong here, but it was a great setup where we had the 9 exhaust signals. We had bearish divergence. We had a lot going on here where we thought we were going to reverse right into resistance. And then we had CPI that gave us a whole nother leg up. So yes, we were wrong here. And then we try again. That's what we do as traders. You don't bet your whole lot on one trade, or else you'd blow up your account here. You just you have trade position sizes that help you regulate and manage your accounts. So we're looking forward to this reversal. We have this nice reversal candle. We're getting some follow through. We just have to close underneath this candle. So far, so good. And then we'll see what happens tomorrow. So that's really what I want to show you. So thanks for joining us here at Options Tender. We are looking for a nice sharp move. I'm calling it a crash. I know that, clickbait and all that, but it should be a nice sharp move. So I'm going to call it a crash. But overall, I am looking for a much, much bigger move to the downside. So that's the real crash. This one should just be the start. But I'm not naive of any higher lows. Okay. All right. Thanks for joining us here at Options Center. If you have any comments, please put them in there. Don't forget to like the video. It's the best thing you can do for this channel to help reach all the traders out there. Have a wonderful day. We'll talk to you tomorrow.